Welcome to Analysis in Chains with Nathan and Neal. Happy Monday, everybody. Nathan Williams here. Joining me, as always, is the ever-loving Neal. Hello, Neal. How are you?
Hello, Nathan. Did you describe me as loving?
Ever-loving.
Ever. I don't think I've ever been introduced like that before, but thank you, Nathan.
I'll bring up new adjectives as the spirit moves me, you know. How was your weekend?
It was good. I was all over crypto news. Sometimes I think this is consuming me because it is so damn fascinating. So it's exciting times. I nearly don't want this hard fork to happen because everything is in hyperdrive in terms of news and opinion because of this hard fork. And I'm worried that once it happens, life will be boring. So we'll see.
Well, we'll see. Maybe, I mean... So far, we've seen how many hard forks is it now? 3, 4, 5, 6.
Well,
and everyone's biting their nails each and every time.
Yeah. I guess we'll call them serious hard forks that we care about. I would say this is like the third main one, but really the second one we care about because Bitcoin Gold is kind of come and gone.
Yeah, that was. Yeah,
it's kind of
Bitcoin Gold was it was almost a non-event.
Yeah, it was like a dud, and I think we expected more, but we all struggled to take it seriously because it just didn't seem very well organized. But with Segwit 2x, we've known this for a long time, and this has been an issue for many years. Just to have Segwit was even a big problem for the Bitcoin community to accept and to launch. So with Segwit 2x coming up, it's going to be very exciting because still a lot of unknowns. I think a lot of those unknowns are becoming knowns recently, but there's still some questions as to what will happen with the mining pool that sticks with Segwit 2x. Like, this coin could become nothing, and would they leave Segwit 2x coin and go to Bitcoin Cash? So there's a lot of speculation out there, and no one really knows. And so, and I think that's now causing some anxiety to creep into a lot of analysts and YouTubers and wherever I read about Bitcoin. So I wouldn't be surprised now if we start to see Bitcoin crawl back just until we get through this hard fork.
Well, it's been, yeah, absolutely. I mean, it's been shouting. No,
shouting.
Yeah, shooting.
I think shouting is a good word because it is everywhere.
Everyone's been shouting about Bitcoin, but it's been shooting up to the moon. I mean, 7,500 over the past couple of days.
Yeah.
I mean, that's got pretty much everybody biting their nails at this point. It's like everyone's excited, but at the same time, it's like, where are these prices coming from?
Exactly. And if Bitcoin was at maybe 5,000, I think people would shrug their shoulders, but it has just shot up so quickly. And when you hear about Coinbase taking on 100,000 new users in one day, it really does make you wonder, okay, are we seeing FOMO, like fear of missing out, really creep in, where people just want a piece of the action? And when that starts to happen, then you start to ask yourself, is this a bubble? I know there's a lot of people there who are very strong supporters of Bitcoin and what it represents and how it's a revolution, but even they have to say to themselves, okay, this is going up way too fast, getting way too much attention. And when people are just piling in money who don't even know what they're doing, it just makes you wonder, okay, well, surely there would be a big pullback because people just want to gain all the profits they made in the last 2 weeks.
Well, this is an interesting side of it, which we have mentioned before, which is that the number of new Bitcoins created is sort of at a fixed schedule. There's not that much liquidity in the Bitcoin market because there's a culture of holding onto your Bitcoins, or hodling as it's known. And as more and more people get excited about the upcoming hard forks, about the rise in the price, and they hear about people talking about Bitcoin, you have more people entering the market, more people wanting Bitcoin. And so, I mean, it's just simple supply and demand. It's going to shoot up. But that's the question, is, are these new investors, this new early majority of Bitcoin purchasers, are they informed enough to know what's going on, what these hard forks mean, and the risks behind Bitcoin?
Exactly. I don't think many people are aware that a hard fork is a risky event. I think because of the Bitcoin Cash hard fork, many people, many people just saw it as a opportunity to make money, because before that hard fork we saw a big drop in Bitcoin price because of the risks, but this time it's the opposite, and people just see it as an opportunity to make free money. But once it does pass, and once people do get that free SegWit 2x coin, I do imagine a huge sell-off, and because for various reasons, you can believe in Bitcoin as much as you want, but there are many other cryptocurrencies out there who are already doing an amazing job, be it as a currency or as a form of blockchain, so using tokens to activate a blockchain like Ethereum, and they're very, very competitive. They're developing very, very quickly, so it makes it very, very hard to justify how one coin whose technology is starting to sound like a dinosaur, how that can prevail over all of them. Because when we look back at Devcon 3, which was the big conference for Ethereum that took part in Cancun last week, they shared their development of their proof of stake algorithm, which is called Casper, and it's supposed to be launched in mid 2018. Well, if a lot of blockchains start to become more dependent on proof of stake, that really is a huge game changer, and Bitcoin ends up being this dinosaur stuck with proof of work, which is very energy consuming, and from what we've seen in the past does cause a form of centralization, as we've seen with a lot of the miners in China. So it really, it makes it very, very hard to really get behind Bitcoin, knowing that there's so much more development happening out there that would make people want to chase other cryptocurrencies. So I wouldn't be surprised if there's a big pullback, and many people have said this, if there's a big pullback in Bitcoin, we could see a lot more value shoot up in terms of Ethereum and other cryptocurrencies out there.
It's interesting that you mentioned that, because really all of the news is surrounding Bitcoin right now. The price of the altcoins, of everything, pretty much, is dropping relative to the value of Bitcoin. And it's almost like, it feels a bit like Wile E. Coyote has walked off the side of a cliff. And he's still hovering in the air, and he's walking, and he hasn't looked down yet. And as soon as he looks down, then we might see some falling in this price.
Yeah.
Yeah.
It's like
I don't know.
Yeah, no, but
that's the analogy that came to
But the thing is, going back to your point on other cryptocurrencies, if you look at other cryptocurrencies relative to Bitcoin, they're now nearly at the same value as they were back in April, before this whole boom actually started. And so you start to realize, actually, this big altcoin cryptocurrency boom that happened during the summer has actually started to deflate. And Ethereum is now at roughly where it was in March when we compare it to Bitcoin. And so it makes you ask the question, is it because Bitcoin has become so big, or is it because this whole ICO bubble is starting to deflate? And there are good arguments for both. So when we look at Ethereum, and one of the reasons why Ethereum shot up so much was because of the ICO boom. But with this ICO boom, and according to coinschedule.com, we've actually seen less money being put into ICOs. October saw a big drop from the month of September. And there are various reports going out showing that less ICOs are actually meeting their targets. And so that doesn't come as much of a surprise, because some of the people who got involved in ICOs from the start, I'm sure that they got burnt to a certain extent, or maybe they did one or two and they felt that was enough. I took part in an ICO. I don't want to say who. I took part in an ICO, and
I'm curious now.
and so because I really thought I had a lot of potential, but then the thing is, once ICO ends, you have this period where you're waiting to get your tokens, and then you start to have this doubt creep in your mind. Oh, will I get my tokens? Could this be another Tezos? And then you start to realize, okay, once I get my tokens, where can I sell my tokens? So now I have my tokens in my Ether wallet after the ICO, but I don't know where I can cash them out. And now I wonder, okay, well, which exchanges will accept these tokens for exchange? And then you start to realize that there's a lot of risk involved in ICOs as a person who's investing. And so I think a lot of people start to realize, okay, maybe I've done enough ICOs for the time being. And because there's so many exchanges out there, it's so fragmented, it is a very difficult process to be involved in an ICO and to even liquidate your tokens. So I wouldn't be surprised that, with the ICOs, we're going to see it deflate further, and we're going to see Ethereum deflate because of that. And then that means Bitcoin is just out there on its own. And I don't think there's enough reasons out there to support it at this high price. And that's why I feel there's going to be a big pullback in the coming weeks.
It's interesting hearing your experience in doing an ICO, Neal, because I've never done it before. But I guess it makes sense when you think about how the technology behind a token sale would work. If you're selling in Bitcoin, the Bitcoin blockchain doesn't talk to other blockchains. If I have my own Nathan blockchain or whatever, there's no way for my Nathan blockchain to communicate with the Bitcoin blockchain. So someone's got to sit there and look at the Bitcoin wallet and say, okay, well, who has sent us Bitcoin? How much was it? And then sort of manually go through and say, okay, we owe this person this many tokens when they're mined or when they're created based on whatever rules. And so it is very much a manual process. And then on the other side, I think we may have mentioned this before, but it's definitely worth repeating, how exchanges work. It's not exactly like a stock exchange where anyone can just trade one token for another one, because these tokens all exist on their own blockchains, and these blockchains don't talk to each other. So again, there has to be a system where you send a token to the wallet of an exchange, and you trust the exchange to open like a bank account or their own ledger or their own just note-taking service and say, okay, well, Nathan owns 5 Bitcoins, and then he wants to trade them for this many other coins, and they make that change internally, and then when you cash out of the exchange, they will send the new tokens to your wallet. But there's a lot of trust that's being enacted there, and oftentimes it can't be done very quickly. You have to add trading pairs one at a time. So it's a slow process to get these new tokens listed in the exchanges.
Yeah, I think you did a great job there explaining the ins and outs of exchanges, and it makes me realize that this whole ICO boom happened too quick, too fast, because of the type of processes out there to make these exchanges work. I'm sure when these exchanges develop much better, become more efficient, and maybe if there's less of them, and they start to consolidate, I think then they will be able to support a more healthier, more dynamic ICO ecosystem. But
I think we're seeing that already a little bit. I mean, I think I know Kraken is growing like mad, and Coinbase, and there are a couple of major players here. It's sort of hard for a new coin exchange to compete.
But the thing is, you'd be surprised how many there are. I was actually very, very shocked when I was doing some research and saying to myself, okay, I'm going to take a random cryptocurrency and try and swap it with another random cryptocurrency. And I started to realize, wow, there are so many exchanges out there, because we're always so focused on the big ones that we actually forget how many there are out there that do a lot of random exchanges. And so if I have just done an ICO, ideally I would be able to exchange my tokens on an exchange I've already signed up for. But if it ends up in a very random exchange that I'm worried about the security of their website. It doesn't really add a lot of value to the whole ICO experience for me. So this is where I feel that the exchanges still maybe have to mature a bit more, maybe consolidate, because if it becomes so fragmented, you got so many of them, I don't think that's good for the ICO market. Ideally, you go in an ICO, you buy your tokens, the tokens are sent to your wallet, and then you send it to one of your 3 or 4 go-to exchanges. Ideally, it'd be that simple. But having to set up a new exchange, a new account, a new exchange every single time you do an ICO, because it's so random which exchanges they will be using, it's not a fun process. So I imagine that after this whole ICO boom, a lot of people who were involved initially have probably taken a step back and say, okay, you know what, I've done my fair share of ICOs now. So it is natural for this boom to come and go, as we're seeing. But then the big question is, because the ICO boom is possibly deflating, everyone who wants to get into crypto could just be throwing the money into Bitcoin because it's just going up and it's the biggest brand that's out there as well.
Yeah, and it's the one that everybody knows.
Exactly.
That totally makes sense. Now, it's interesting when you put it that way. I guess it does make sense that there are so many individual exchanges, because it's not an efficient process to add a new trading pair.
Exactly.
And so that would create space for new exchanges to crop up.
Exactly.
I can imagine with the number of new people who are getting excited, though, and who are jumping into the Bitcoin craze, 100,000 users at Coinbase over a day, that there would be a lot of misinformation and people not understanding how these exchanges work, and probably a lot of confusion around that. I could imagine people sort of getting spooked just from not knowing what to expect.
Exactly. It's if you're coming into this world without having done your research, it can be off-putting, and then there is the risk of coming into this world and not coming from USA, for example, because if you set up a Coinbase account, and like I'm based in Canada, if I buy cryptocurrencies like Bitcoin or Litecoin on Coinbase, I can't actually cash them out on Coinbase. I don't have a US account, and because I'm in Canada, they will not allow me to do that. So you'd be surprised how many people actually, after setting up a Coinbase account, probably realize, that $1,000 of Bitcoin I'm after buying, I can't get it out. It's stuck there, and it's very, very difficult to find a way to convert your Bitcoin into Canadian dollars, for example. So I'm sure a lot of people have just experienced this for the first time and realized, okay, this is as far as I go, because it's just not that easy to jump in and out of the whole crypto sphere. So this is why I think that a lot of people running in all excited, not knowing much, and maybe we're going to see people just step back and just see what happens. And again, another reason why I think that we're kind of going through this peak Bitcoin right now, and there is a sense that I think things will pull back in the coming weeks.
What'll be interesting is to see if this inverse relationship of price holds with the altcoins. So everything from the big ones like Dash or to the small new ICOs. Really, right now, like you said, like the big price spike has been in Bitcoin, and if people are finding it difficult to get their Bitcoins back into fiat currency, they may end up investing in some of the larger alts.
Exactly.
Bitcoin Cash, that sort of thing.
I ask myself this every single day. You've hit on something I often think about, because if people start to move out of Bitcoin because it's so bubbly right now, will it go into Ethereum altcoins, or will they cash out? This is, I feel, the biggest question in the next few weeks.
The other thing with the SegWit2x fork is, again, the continuing debate of who gets to call it Bitcoin.
Yeah, that looks to be resolved, thankfully.
Yeah?
Yeah, so a lot of the exchanges that were kind of on the fence about which one was which. Some were saying it depends on hash power. They've now all decided that legacy Bitcoin, if you want to call it that, will be BTC, and Segwit 2x coin will be B2X.
That is interesting. I did not expect it to necessarily play out that way.
Yeah, I know. I think to me that's the biggest thing, because the marketing of Bitcoin is so huge that if BTC was the Segwit 2x coin, I would feel that the legacy coin would just completely fall apart. Because the BTC name and the just being called Bitcoin is the biggest marketing tool right now, I feel. And but as we said before, we said this in I think a week ago, the exchanges are the kingmakers, and this decision really does help a lot of the core team that's been pushing for Bitcoin to become this was a store of value, which I don't think a lot of people agree about. But because they're so gung-ho set on the store of value, you could say characteristic of Bitcoin, it looks like it's going to maintain that property or that brand after the fork.
Given how much of Bitcoin's value is based on its name, I wonder if this calls into question the potential success of the fork.
How so?
Well, I mean, if you're calling it B2X, you lose a lot of the brand value.
Big time.
The thing is, if it would have played out the opposite way, if the majority of the hash power, if all the major players, I think, what was it, 80%? Something ridiculously large.
73 I think between 73 and 80 at the moment, yeah.
73 and 80% of the miners were going to move over to Segwit 2x, right? So those are the big guys. That's the largest chunk. And if they got to keep the Bitcoin name, then yeah, the original legacy Bitcoin would have fallen apart. But now you've got this maintained power struggle, because all of the marketing value is in legacy Bitcoin. People coming in to the Segwit 2x token, which actually has the majority of the hash power now, are going to be looking and go, well, what's this B2X? Like, why would I go with
yes.
that? Like, that's like, and so now you've got sort of like more hash power and more I suppose, in community leverage in the B2X, but yet more marketing power with the legacy Bitcoin, which has fewer people in it. So it's definitely maintains this power struggle. This is a very it's funny. Like I've sort of had my head in the sand doing work all weekend. I didn't know that had been resolved in that way.
Yeah, and so it kind of brings up the question: what is the Bitcoin Segwit 2x to anybody now? Because the argument is that Segwit 2x would help with scalability, and it would make it quicker and help with transaction fees and stuff like this. But then it's becoming quite similar to Bitcoin Cash. So Bitcoin Cash expanded the block size instead of implementing Segwit. And now you have Segwit 2x, which I believe will expand the block size to 2 megabytes, but will have Segwit. The thing is that they're kind of trying to be the same type of coin. They're trying to be the main Bitcoin, but act more like Cash because of block time, transaction fees. So it makes me wonder, okay, what is Segwit 2x? Where is its marketing space? What is it trying to sell itself as? If Bitcoin Cash already has that space, if it's already saying, no, we're the real Bitcoin because you can use us more like Cash, whereas the real Bitcoin, the BTC part, it's the transactions are more expensive, it takes longer with block time. So yeah, so this is my issue with B2X, like, and I kind of worry that it could just fall over a cliff until there's some sort of front man like Roger Ver or Christopher Wright who we see talking about Bitcoin Cash, unless B2X have someone like that can start to explain to us the point of B2X, it could really fall over a cliff.
Well, exactly. When you get into more than 2 or 3 different camps,
Yeah.
In any sort of political discussion, or if you have more than two or three groups that you're trying to sort between, unless you're really, really knowledgeable about the whole space, you start to gloss over. Like, okay, well, who am I rooting for? Why am I rooting
Yeah.
for them? And these are very small differences in technology from an outsider's perspective. And the majority of the value is because of the outsider's perspective right now. You've got
Exactly.
100,000 new Bitcoin investors. I mean, in a day. I mean, they're not going to know all the ins and outs of SegWit, SegWit 2x, Bitcoin Cash. Anyway, the last thing that does come to mind, which you did touch on earlier, when we're talking about pressure from the altcoins and people maybe migrating from the altcoins to from Bitcoin to the altcoins, is potentially the fact that no matter which version of Bitcoin, they're all using enormous amounts of power, absolutely enormous amounts of power. I don't know if you've seen, there's a couple of articles I've seen that have been going around. Do you know how much an average Bitcoin transaction costs in electricity, Neil?
Okay, I think I've seen this article somewhere. Is it the same amount of energy as a home for 1 week?
Yeah, it's about
Oh, yeah.
215 kilowatt hours per transaction.
It's crazy.
Now,
Crazy.
215 kilowatt hours, yeah, that's like a house, with its refrigerator, with its computers and TVs and everything, heating, and essentially the Bitcoin network is using as much electricity as Ireland. It's 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 about 24 terawatt
Crazy.
hours every year, and so I mean, and this doesn't get factored in to the Bit Coffee index. I mean, imagine that you were, working out the cost of using Bitcoin to buy a coffee. You have to factor in the 215 kilowatt hours of electricity to make the transaction.
Good point. Good point.
Now, I did a little bit of math, not tons, but I know that here in Germany, electricity on average is 7 cents per kilowatt hour. Okay, so and so that's what, about $21. I closed the calculator, but calculator, 7 cents times 215 is 215. Whoops, times 7 cents. That's $15, or euros, I guess. 15 euros per transaction. Now, if the average Bitcoin transaction is costing 9, someone's getting screwed out of the remaining €6 of their electricity fee.
Wow.
But again, this is an inefficient market, and this electricity fee gets spread over the thousands of people who are out there mining, hoping to strike it rich with a couple of bitcoins. This is why Bitcoin mining gets concentrated in China, where the electricity is about 4 to 4.5 cents per kilowatt hour. Because at that point, 4 cents per kilowatt hour times 215 is €8.60. So if you're spending €8.60 and it's a €9 transaction fee, then it suddenly makes sense again, right? Because
Yeah.
your expected electricity cost is less per transaction, is less than the transaction fee. Nevertheless, the point is, because this has become so unwieldy, the idea of moving to proof of stake, like with the Casper, like Ethereum is with their Casper project, moving over to the proof of stake system, does make sense, and that will add pressure to Bitcoin going forward. And even though everyone is talking about Bitcoin, that's dominating the news cycles, there are a lot of altcoin projects, and Ethereum is a big one that have the potential to put the pressure on Bitcoin and become the new dominant force in the industry.
Exciting times.
Anyway, this was fun. So thank you, listener, for joining us.
Listener.
Listener.
Yeah.
I'm sure that we've got more than one now.
Yeah.
Thank you, everyone, for joining us. Don't forget to visit Neal and I on our webpage, www.analysisinchains.com. I know that some people have had problems with the webpage displaying properly on mobile. We are working to fix that. But anyway, on the webpage, you can sign up for Slack. We've got a Slack group there. We've had a bunch of people join us, and we have conversations about the news going on in the industry. We have some people we meet up with. We talk about future shows. So it would be great to have you there. Feel free to join us. And some people have asked to support the podcast. So if you want to support us by donating, there's a wallet that's available on the website. So we'll talk to you again at the end of the week, where we're going to have a show about the Waves token.
Okay.
All right. So tune in then. That's our show. Thanks for tuning in to Analysis in Chains with Nathan and Neal. Check us out at analysisinchains.com, on iTunes, Podbean, and wherever else you listen to podcasts. Until next time, keep hashing.